Good evening, ladies and gentlemen. Welcome to our weekly investor update. I'm your host, Dan Theok, Senior Vice President of Investment Banking. Joining me today on today's panel is our investment advisor, Justin Scott. Justin is another regular on the panel, and we're excited to hear what he'll be sharing with us today. Welcome, Justin.
All right, thanks, Dan.
Today, we'll be discussing JMMB Group Limited and Medical Disposables and Supplies Limited. And as always, we implore you to stick around until the end of the program for our special segment where Justin will impart some invaluable investment advice. If you're a fan of the content, then don't forget to subscribe and hit the bell on all our social media to stay up to date with the channel. We upload content like this every single week. And don't forget that if you're looking to embark on your very first investment journey, you should reach out to Mayberry. Follow us on social media to learn more about how you can get on the path to financial independence. Now let's jump right into it with the first up to be reviewed, Medical Disposable and Supplies Limited.
All right, thanks, Dan. So let's get right into it. So Medical Disposables and Supplies, or MDS Limited, as the name would suggest, they sell medical disposables and other supplies, and mainly things relating to the health sector, right? So they have the rights to distribute pharmaceuticals, other medical supplies like clinics, health centers, hospitals, things like the gloves, the cotton, and all of these other disposable supplies that the doctors would be utilizing to assist the patients, right? They also distribute the drugs, the pharmaceuticals in their pharmacies through the various distribution lines and chains that they have right across the island. Most recently, if you guys have been keeping up the news, they actually acquired 60% of Cornwall Dental and Medical Supplies. So that has been instrumental in actually boosting some of the revenues that they've been getting recently for their pharmaceuticals. They've also now been able to branch out into supplying, dental supplies to the other dental institutions. So that has been some of the ways they've been trying to achieve growth recently. They actually listed in the JSE in Christmas Eve 2013, and since then have been continuously improving on their growth. If you take a look at the chart on the screen right now, you can see how they've been increasing over the last financial year. So financial year which ended March 2022, you'll see that revenues increased 41%. A lot of that was attributable to the increase in the pharmaceuticals. As I said before, they have the rights to distribute the vaccines locally, as well as some of the vaccines, right? Achieving $3.4 billion in revenues. That's a whole new record for them. A lot of that has been, if you really break it down, majority of that is from the pharmaceuticals. Following up then is the consumer and household supplies that they also do. And then afterwards, you get into the medical supplies, right? Cost of sales, of course, is going to be a little bit higher, seeing as how, we're having supply chain issues overseas. So things have been getting more and more expensive to acquire, as well as the fact that they don't really produce them directly. So there are other costs associated in getting them out to their distribution lines. But nevertheless, gross profit is up 56%. Admin expenses, understandably, regarding the acquisition they did earlier last year, has increased over 55%, accounting for things like rents that they now have to pay on one of the properties, increasing their employee base by over 55%, paying out new things for all these employees to ensure that everything is fine, right? Selling and promotional costs are only increased up another 22%. This has been a little marginal. However, they have shown that they are increasing their promotions to get more people to understand that what have been going on, to further increase the sales of their products. And further from there, we get down to operating profit, which has increased at pretty good 135%. Which brings us then to the loss on foreign exchange, and then profit before tax, which is up 93%, which is quite remarkable actually, right? Net profit is up 51%, although as I had mentioned earlier, they listed in 2013. So at the end of 2023, you can expect that they would have reached the 10-year mark of their listing, which afterwards you can expect that the net profits after tax will go down just a bit after, because the concessions that they have will be relinquished, right? EPS is up 51% from 0.26 to 0.40. and that's pretty good for me. The PE currently is about 17.75 times, which is just below what the junior market average is now in my estimation. The current share price is $7.11, and the price to book is about 1.9. But moving on, we can look into the next slide and see how they've been performing over the last few quarters, right? As you can see now, the quarterly profit movements from 2019 right up until the last quarter of 2021, it was taking a little bit of a dip right before COVID, and they actually were impacted by COVID. And I know what you may be thinking, right? It's a medical company. They're selling pharmaceuticals. How would they have been down during the whole pandemic? But you have to recall that they had other restrictions placed upon them in terms of the operation times. We had lockdowns. We had days when no movement could happen any at all. This affects their operating hours. This affects the top line, and naturally would affect the profits that they had. So I believe the current CEO, Kurt Booth, recall that this was the first time they were ever operating in the red for those 2 quarters of 2020. But afterwards, like a phoenix rose from the ashes. Third quarter of 2020, they moved up to $25.4 million in profit, and then shooting up at the end of 2020 for the fourth quarter to $57.3 million in profit. All right. Ever since then, they've been doing a whole lot better than prior to the pandemic. You can attribute some of this to the acquisition that they made recently. You can attribute some of this to the increased distribution lines and rights that they have to sell some of the pharmaceuticals. And as they've hit their new record in terms of revenues, you can only expect that they'll continue pushing from here. I believe in the management of Kurt Booth, and I know he's going to bring a brand new, fresh approach to it now. Probably try to spice up the company just a little bit more. Maybe there might be more acquisitions on the line. Maybe there might be a raise on the line, because if you even take note of the share capital in the company, there is a lot more room to take advantage of with an additional on-the-market raise. All right. Further from there, you'll see the stock price history. So now the lowest price at June 29th, 2021, $4.24, which would have been a great buying opportunity for those who are paying attention and looking to take advantage of the companies that would have been benefiting from the situation at hand. And since then has risen to a high at May 18th, 2022 to $8.38. That's just beneath 100% from the lowest point there in under a year. That's a great performance if you ask me. As long as they continue to be proactive in how they're operating, you can expect more from the company. Any thoughts on MDS, Dan?
Yeah, thanks for that, Justin. I think it's a fair analysis. For sure, it's interesting to see how they'll continue to grow the business. We've seen 5 or 6 quarters of consecutive good profitability, over $25 million per quarter. We take note of the fact that they will come off of the junior market next year, which means their tax concession goes away. So
Exactly.
Some pros, some cons there. I think it's fairly priced right now at about $7. The main market PE I like to think of as 14, 15 times,
Right.
while I agree with you, the junior market 17, 18 times. So they're going to sort of shift back into the main market space. It's not a large market cap by any imagination. It does not trade with significant volumes,
Right.
but still, pretty good stock and a good company. And we've had Kurt on the program before. I like what he's doing, and I'm hoping they'll find ways to keep growing the business. So growth will be important to continue driving up this stock price and adding value for the shareholders.
Absolutely.
Thanks for that. Great. Next up is JMMB. Great. So from a $2 billion market cap company to an $83 billion market cap
Right.
company, we're going to look at the 12 months ended for March 2022 for JMMB, and it's just been a fantastic year, guys. They've grown top-line revenues by 24% to $42 billion, grew their fees and commission business by 73% to approximately $3 billion, continue to do very well on their gains on trading of securities, up at $7 billion. And ultimately, this translates into a growth in their net profit from $7.7 billion to $12 billion. In between there is the gain on their share of profits in their Sagicor financial business, which was roughly $2 billion last year and is up to $5 billion this year. And that's a big part of their $12 billion performance. So great performance, EPS growing by 52%, up to $5.85. And when you look at the current share price of $42, that translates into a PE of 7.3 times in a main market where, again, we like to think of the main market average as 14 to 15 times. So this stock is trading at about 50% of the main market average PE, which is just ridiculous for me because we continue to see the growth in the business. They've demonstrated that over the last 4 years consecutively, and yet we see the stock price, trading with one of the lowest PEs out there. It doesn't make any sense to me, and it signals to me a great buying opportunity for JMMB. It's a stock that trades with good volume, so you'd be able to get good volumes of this stock. They raised over $12 billion at $38 3-4 years ago, and they had an APO. Stock has peaked as high as $60 in the past, and so it's been trading down. And when we saw it at 34, 36, we kept saying it's a buy, it's a buy, it's a buy. And even at $42, guys, the stock is a buy. You're going to come back in a year's time, and it'll be up 50% in my estimation. So the only small concern for me, looking at the growth in the business, they've grown assets by 20% up to $614 billion, is where we see shareholders' equity falling by about 8%. And that really has to do with the adjustment in their evaluation reserve of investments that they have that go through OCI. They had about a $15 billion swing in the investment revaluation reserve account. So they've got about $312 billion in investment securities, and it's obvious that some of those securities marking to market with the increase in interest rates have resulted in like a $15 billion swing in the value of those investments, and that's going through OCI. And that's only about a 4.5% adjustment to the value of those assets that they're carrying. So it's not substantial, something to take note of. I think it's temporary, that as interest rates trend back down in the future, that you'll see that value coming back. But I'm more focused on earnings per share, as we should all be, and I think they still have healthy level of reserves, still have a healthy level of shareholders' equity up at $54 billion. So I'm not worried about it at all. I think this is a company that's going to continue to grow from strength to strength, and they're very well positioned. It's a great buy at $7. Just to give you a perspective in terms of PE, NCB, that's down to $100, still that's a 13 times PE. Sagicor Jamaica down to $54, that's still 11.6 times PE. And one more, Scotiabank down to $36, this was $50 2 years ago, that's still a 13 times PE. So most of JMMB's peers are trading 11 to 13 times, even on their bad days. So it makes no sense to me that JMMB is trading at 7.3 times. It's a great buy. Go out and get yourself some. Next slide, we show the quarterly performance. And again, it just shows that, in the last 4 quarters, there's only one quarter, Q1 2022, where they were under $3 billion. So I'm really excited to see what the next quarter will hold, folks, because if you follow the trend, they're probably going to have a $3 billion quarter, which means their trading earnings will improve significantly. And so this is, I'm looking really excitedly to see what the next quarter brings. I'm going to bet it's a much better quarter than Q1 2022, where they only did $1.7 billion. I'm going to bet they're going to do well north of $2.5 billion, which means, again, the EPS will continue to improve. So great company. They've clearly sorted themselves out over the last 4 quarters. Sagicor FinCorp, which they own 23% of now, up from 22.7%, is doing exceptionally well for them. And they're growing the business generally in Dom Rep and in Jamaica and so on and so forth. Next slide, looking at the share price movement. Again, this is a stock price in the last 2 years, which was a high of up to say 50, went down to a low of 34. Now it's kind of up into 42, 43 space. But this is a stock that should easily be at $60, and I expect it to get there within the next 6 to 9 months for sure. So great buy from my perspective. That's my thoughts. Justin, what do you think?
Absolutely loving JMMB, trust me. So it's definitely one of the better performers in terms of definitely one of the better performers when you compare it to its peers in terms of in terms of its P and evaluation. The last time it even hit around these prices, it had a price ceiling essentially at about $45 mark, and it's then taken a dip since then. But I believe once they crack above that, that's going to become the next price floor essentially, right? So further from there, we can expect great things from JMMB as they've been continuously improving upon all of their main sections, right? I'm especially impressed by the increase in fees and commissions, right? That's increased about 76% recently. That shows that they have a strong client base, continue doing work. I'd love to see how more they can grow. Even though it's not one of the main revenue bringers for them, the level of growth at the size of that company is impressive. The level of growth in net profit at the size of a company like that is very impressive. And I know they have great stuff planned going forward, right? Whether it be from them as JMMB, whether it be from Sagicor Financial Corp, the increased business that they're doing out in Damrep. I really like the direction that JMMB is headed in.
Thanks for that. Appreciate that. Up next, folks, Justin will now bring you some insights from our special segment. Justin, the floor is yours.
Okay, great. So, guys, to close out the show, I'm bringing you today's investor tip. And today, I'll be talking to you about leverage. You cannot be afraid to use leverage, right? Other people's money is some of the best money you can have access to, right? So whether it wants to be a margin facility that we can provide for you here at Mayberry Investments, I personally, I believe a lot of the people within the industry will agree that we have one of, if not the best margin facility across all the brokerages, right? You can quote me on that. Further from there, you can even look into making use of a loan. So put this into perspective, right? You're an avid investor. You have the mindset at every month when you get paid, you're going to set aside some of the funds that you're going to transfer over to your account and you're going to invest this, right? Say for example, it's $50,000 per month. You could just as well take out a loan at the start of the year that the repayment is about $50,000 per month, and you'd essentially have a larger lump sum that you can do more with as the year goes on, while still keeping that same amount that you already committed to do every month, right? So why work harder with less when you can take on more leverage and do a lot more with some of the opportunities that we have here on the market?
Thanks for that, Justin. I agree with you wholeheartedly, and you've sort of found one of my secrets. So I like to make my large investments at the start of the year, plan for how much I was going to invest for the entire year, take that through a margin facility, and then pay back down that margin loan over the year.
Exactly.
That way I make my large upfront investment at the start of the year, and I set a target rate of return that I want to make, whether it's 25, 30% on my portfolio. My loan's costing me less than 1% a month. I pay back that over 6 to 12 months, and invariably, I find any decision I made at the start of the year, my only regret is typically I wish I bought more of that stock.
Exactly.
So it's a good idea. It's a good strategy as you get more sophisticated to use leverage against your portfolio to start your investments off more aggressively. It's also a good strategy with the IPOs.
Definitely. Oh, for sure.
Look at Dollar, for instance. I had quite a few clients who borrowed $20 million against their portfolio to improve their chances of getting the appropriate allocation. So margin's also a great strategy when you're going out to try to catch some of these IPOs.
Absolutely.
So thanks for that. Appreciate that advice. I think it's a sound tip. Well, folks, we're keeping it short and sweet this week. So to our viewers, thank you for your continued support. As always, it's well appreciated. And I'd like to thank my fellow panelist, Justin, for today's insights and contributions. Thanks, Justin.
Much appreciated, Dan.
Okay, folks, well, be sure to look out for our virtual investor updates and forums in the coming weeks. I think next week we're going to have a great quarterly review. Don't miss it. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Keep safe, folks, and remember, wise investors, slow and steady wins the race. Goodbye.